Women lie, numbers don't. Well, I'm about to say women and men lie, and numbers don't. So in this episode, we're going to be going through these corporate earnings. We are in the midst of corporate earnings season right now, as we're speaking right now, ladies and gentlemen. Amazon just released their earnings yesterday. Apple released their earnings, and Facebook and Ford released their earnings. But guess what? We have seen that Apple stock, even though it has released blowout earnings, the stock has gone down. What's going on? But ladies and gentlemen, we're going to look at these corporate earnings because this is a good indicator because everybody say, hey, we're in a pandemic. Hey, this is going on. Let's see what these corporations are doing. So ladies and gentlemen, y'all stay tuned. And don't forget to hit that like, subscribe, comment, and share button. And if you haven't done so already, go ahead. Hit the subscribe button. Hit the bell icon. Hit that like, comment, and share button. Once again, ladies and gentlemen, boys and girls, and children of all ages, you are now tuned into the Investor Show. As always, this is your gracious host, the Prince of Investing, Prince Dykes, coming to you guys and girls live all the way from the beautiful city and state of Denver, Colorado. Don't forget to hit that like, subscribe, comment, and share button. And as always, I don't have a lot of time, and I definitely know you guys and girls don't have a lot of time, so we're going to jump straight into it. So, ladies and gentlemen, as you already know, we're going to be talking about Facebook, Amazon, and Ford and Apple's earnings. We're in the midst of corporate earnings season. Why corporate earnings seasons are so important? This kind of gives me a good indicator. Where are we in the economical cycle? Are we in a trough, expansion, a peak, or a decline? Are companies making money? Are they making more money, less money? What's going on? That's what this episode is going to be about. So, ladies and gentlemen, right now, hot off the press, I mean, extremely hot off the press, you have right here in front of you Amazon first quarter results. So coming out of Seattle, as of today, April 29th, Amazon today announced their financial results for the first quarter ending March 31st. From January to March 31st, what has Amazon done? Okay, operational cash flow has increased by 69% to $67 billion for the trailing 12 months compared to $39 billion for the trailing 12 months from March 2023. So their cash flow, operational cash flow, has gone up 69%. The free cash flow, this is money that's coming into the company, increased by 26 billion for the trailing 12 months compared to 24 billion for the trailing 12 months ended in March 31st. So last year, this time, they in free cash flow, they had 24 billion. Now they made 26 billion. Free cash flow, less principal repayment of financing, and increased by 14 billion. Free cash flow on equipments and financing. Let's see. Net sales, this is a big one. Net sales increased by 44%. They reported net sales have increased by 44% to 108 billion in the first quarter compared to 75 billion of the first quarter of last year. So you got to think about it. From January to March, the pandemic hasn't really started kicking in, and they're still making more money than they ever did. They're in a perfect position. Amazon was in front of the bubble by being in front of e-commerce. Now that everybody's going to e-commerce, they've done very well. So now let's get down to the nitty gritty. Let's look at that operational income. Operational income has increased by $8.9 billion in the first quarter compared to $4 billion in the last quarter. So they went from 4 billion in the first quarter of operational income to 8.9. This is the top line revenue. People like to call that top line revenue. Now let's look at the bottom line. The bottom line increased by $8.1 billion in the first quarter, or 15.29 per diluted share, compared to the net of 2.5 billion or 5.9 the last quarter. So last quarter, their top line has increased by pretty much almost doubled. They had 4 billion, their top line revenue. Now they have 8.9, and their bottom line has quadrupled. It went from 2.5 to 8.1. So good thing there with them. Now let's see what they got to say about that. They saying 2 of our kids are now 10 and 15 years old, and after being neutered, they're growing up fast. I'm thinking they're talking about their kids here, dogs or pets or something. They're growing up fast and coming into their own, said Jeff Bezos, Amazon founder. As Amazon Video turns 10 years old, okay, they're talking about, okay, Amazon Prime turns 10 years old. Over 170 million Prime users have streamed shows and movies in the past year, and streaming hours are up more than 70% year over year. Amazon Studios received a record 12 Academy Award nominations and 2 wins. Upcoming originals include Tom Clancy's Without Remorse, The Tomorrow War, The Underground Railroad, and much more. In just 15 years, AWS has become a $54 billion annual sales run rate business, competing against the world's largest technology companies and growing acceleration 32%. Compared to Airbnb, it said companies from Airbnb to McDonald's to Volkswagen come to AWS. That's their web service, Amazon Web Service, because we offer what is by far the broadcast set of tools, the broadest set of tools and services available, and we continue to innovate. And we love our Prime Video. Okay, so they're talking about the AWS, the Amazon Web Service, and the Video Prime is pretty much doing tremendous. So right here, that is Amazon, ladies and gentlemen. Now let's go over and let's take a look at who's next. Now let's take a look at Facebook. Let me remove this real quick. What is Facebook doing? I got to get a little bit quick on here because I got a couple of them to go through here today. So let's look at, let's look at Apple. Apple is one of the largest companies. Apple reports its second quarter's earnings. Apple announced today its financial results. The company posted a March quarter result of revenue of $89 billion, up 54% year over year, and quarterly earnings diluted by $1.40. International sales accounted for 67% of the quarter's revenue. This quarter reflects both the ending ways our products have helped our users meet these moments in their lives, as well as optimism customers seem to feel about the better days ahead of us. That's Tim Cook, the CEO of Apple. Apple is in a period of sweeping innovation across products lineups, and we're keeping the focus on the things like that. All right, I want to see the numbers. I don't care about you talking about what you're going to do. That certainly begins with products like the iMac and the iBook Pro, extending its efforts like 8 gigawatts of new clean energy will help bring into the grid. $430 million in the next. Okay, so they're putting $430 billion into green energy over the next 5 years in the United States. Okay, now here we go. They declared a 22% dividend. Look, they're raising their dividend there, their cash dividend of the company stock, and an increase of 7%. The dividend is payable on May 3rd. So they're raising their dividend. So you're looking at companies making their revenue is up by 54% and they're raising their revenue. So that's Apple. So that's Apple and Amazon, two of the major companies that we have. Now let's take a look at the next company here. Who's the next one here? Give me 1 second. We got Amazon. Let's go with Facebook. I said I was going to do 4, but I may not do 4. 4 is not as big. Okay, now we got Facebook. Facebook is first quarter. We had a strong quarter as we help people stay connected and businesses grow, says Mark Zuckerberg. We will continue to invest aggressively to deliver meaningful experiences, all of the good stuff like that. All right, let's see what they got here. Okay, 2021 with these numbers in billions and millions. Okay. So their top line revenue, they went from 17 billion to 26 billion. Top line revenue increased. That's the total revenue. Now let's look at that bottom line. Where's the net income? Net income went from 4.9 billion to 9.4 billion. Went from 4.9 billion, almost doubled in net income. That's the bottom line there. Now here's their fourth quarter highlight. Here are the highlights. Head count was 60%, an increase of 26% year over year. Okay, so they got $64 billion in cash. Okay, I don't care about the active users. They look at their daily active users. I don't really care about that. But right there, ladies and gentlemen, you're seeing, look at their top line revenue grow from 2020 to 2021. So that's Facebook, Amazon, and Apple. Numbers are growing. Apple is paying more in dividends. So I know people feel like we're in a trough, we're at the peak, but you're looking at these corporations report the best quarters they've had ever. Their money is still growing quarter over quarter. What do you have to say about that, right? So y'all comment below and let me know what y'all think about this. Look at Facebook. I'm just doing their highlights. Look at Facebook. They're running up. Look at Amazon. Their corporations are going up forward, having blowout earnings as well, which I don't want to get into in this one. Facebook, Amazon, Apple, the big ones. Apple and Facebook and Amazon together, they compile majority of the NASDAQ. They also compile not majority, but the Dow Jones. Apple is in the Dow Jones. But look at these major indexes. Read the corporation's earnings. This what lets me know we're in an expanding economy. And when you see these stocks going down anyway, that lets you know when the market has gotten it wrong. And right now you're seeing all the talking heads and financial media, they're justifying why the stock went down. But there are times when companies report blowout earnings like Netflix and the companies start to drop. Why did the companies drop? because sometimes some people say they're overvalued. But I think that this is when people are undervaluing what's going on. People got to understand, if inflation goes up, the price of stocks, the price of everything, costs and goods and services will have to go up, right? But anyway, ladies and gentlemen, that's going to conclude today's episode. I'm going to get out of here. Hopefully, y'all took something out of this. Don't y'all forget to hit that like, subscribe, comment, and share button. Oh, what's going on, Al? He says, great afternoon, sir. And Lucky's mom, how she doing? She said, I wonder if the mention of capital gain tax increasing led to the stocks going down. Yes, President Biden, great question there. Great statement there, Lucky's mom. Everybody keeps talking about the capital gains tax. It hasn't happened yet. President Biden wants to raise the capital gain tax on corporations in order to pay for this infrastructure bill. So when you see that, that's going to affect corporate earnings. You know, we just talked about the top line and the bottom line. That's going to affect the bottom line. So if taxes go up, you're going to see corporations try to run and not pay the taxes, and that can hurt companies. With that being said, yes, that does scare investors because that's more money coming out of companies. So people are more stagnant to invest. When I see this is when value starts to creep its way into the market. When you're seeing companies blow out their earnings, but their stock is stagnant or going down, that should be an indicator. If you have a little cash, this is when it's time to make moves into things like Apple and things like that. So anyway, ladies and gentlemen, I hope y'all got something out of this. And to the next video, podcast, cartoon, or whatever else crazy y'all see me do around the globe, my name is Prince Dykes. Peace, be safe. I'm out, and thank you.